Hey, Andrew here from the Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 37. And I'm Woody, and this is episode number 37, as I said. And today, look at this headline. It's a cracker, particularly when you hear actually what is in the article. I love this. This is absolutely why we do these weekly wisdoms. Big money mistake Aussies risk making as they rush to buy a home before Christmas. So I thought, geez, I saw that headline. I thought, shit, what is this mistake I'm making? And I came in here and it tells me it's just now 5 weeks until Christmas. And I heard the other day it's about 40 days to Christmas, and I'm thinking, bloody hell, it's just around the corner. What is this massive risk we're making? And it's basically says we're rushing to buy before Christmas or to get settled before Christmas, and that experts are warning that we could be making a financial misstep by trying to rush a major purchase. I totally get that. That is 100% accurate. Do not rush your property purchases ever. And it goes on to talk about signs that people might be buying sight unseen. They might be avoiding doing the necessary checks like your building inspections and things like that. All of that type of stuff is absolutely a no-no when it comes to investing. And if you're an investor, whether you settle before Christmas or after Christmas is not a big deal. And in fact, I would suggest that trying to settle an investment property before Christmas and then find a tenant just on the week of Christmas is going to be extremely difficult, because I'd imagine whilst there is a massive amount of demand out there for rentals, I suspect that people aren't thinking or wanting to move in on the week of Christmas. So if it trips into January, then so be it. So I absolutely agree with this article that you should not rush to get your property settled and avoid doing all the necessary checks that you would normally do with a purchase. But the funny thing is, as I said, it talks about this misstep or this mistake that people are making, property buyers are making, and then the majority of the article talks about all the positive things happening in the property market. So once again, let's lead with an emotive headline, suck us all in to see what is this big misstep that we're all making. And turns out, well, maybe not all of us are making, but it says, you might be making, you could be making, whatever it might be. And then goes on to tell you, that you shouldn't rush these things. It could cause serious financial ramifications. You're going to own these properties for a long time, so there's no need to rush. You don't need to overpay. And so all of those things make sense, totally make sense. But it's not really what the article's about, because once it's dealt with all of that stuff, it goes on to tell us about how the property market's performing quite well, how auction clearance rates are pretty strong, how Brisbane and South Australia are showing really strong results, how investment home loans are proving popular, with lots of uplift, 14% uplift in investor sessions. It's talking about how the level of mortgages in the month of September was strong, and it's only modest, but it's showing that things are doing reasonably well in the property market. And I would imagine the proportion of property buyers looking to rush in prior to Christmas is so tiny that they're certainly not going to be persuaded by this article, and it's just not a huge problem out there. Most people understand that you've got to do your due diligence when it comes to a property investment. Like you guys who are watching this, I hope are property investors, and you get that there's some work to do, and there's no need to rush at this time of year. So, but anyway, again, as I said, the article then continues to talk about a whole host of other positive things about what's going on, despite the interest rate rises. I've been talking to more and more clients lately who are facing low fixed interest rates coming off in before the end of the year, or certainly in Q1 next year, and how that's going to impact their capacity to spend. And I think we're still to see a lot of that to follow or flow through into the property market. And we certainly haven't seen the latest interest rate hike flow through to the market yet, as the banks take a couple of weeks to pass on those increases, and then that takes another month to flow on to your living expenses. But it's all happening. It's all going to really put a dampener on the property market, in my opinion. Auction clearance rates are around 69%. I remember a time where people would have said that's not great. Now they're saying it's pretty good. And it is pretty good. Around 70% is the average. Anything above 70% people get excited about. And as I said, pardon me, as I said, there's they're calling it frenzied activity here in Brisbane and Adelaide. 71% of property scheduled for auction sold in Queensland, 79% in South Australia. So we know they're strong markets, particularly for investors because of affordability. And so we expect those type of numbers. And then you can see a nice graph here of what's going on across the country, where the strengths are, and why we're seeing all these positive headlines. Well, maybe not so with this one, but certainly we're hearing lots in other media about what's positive with the property market. I still caution that we may see some flatness as a result of the recent interest rate rise and the volume of people coming off fixed interest rates in the not too distant future. I'm convinced we will see some forced selling as a result of that, and that latest interest rate rise is only going to make that worse. But things, this is a change in dwelling values over the last 12 months to October 23. So there's some nice metrics there, and certainly some interesting data on where to avoid. So these places with negatives obviously would not be great. And Australia across the board, 5.6, not an overly relevant calculation for most people. It depends on where you are. So you want to have a look at these state by state numbers to see what is happening where your property investments are. And as I said, Perth is a standout. Sydney looking very strong, but affordability is obviously always a big problem there for investors. Perth looking great. Adelaide, another strong, affordable place. And Brisbane, if you can get past those suburbs with high crime rates, then there's some affordability in Queensland as well. But as I said, some interesting data, but a lot of that data is irrelevant to what the headline was all about. But it sure caught my attention because it was all about this mistake that we're making. I wanted to know what the mistake was that we're all making. And as it turns out, it's a fraction of people might be making rather than all of us. And so not much more. Like I said, lots of positivity in this article about what's happening in the property market and just using all the data to back that up, which is great to see. They're using data. And there's the final comment here about the cost crunch hitting Australians with a mortgage particularly hard at the moment. So that's a threat to, like I said, to those people coming off the low fixed rates. It's also those that are on, and have been on variable rates all this year. They will be really feeling the pinch of all these interest rate rises. So it will be interesting to see. Here it's saying nearly 2 in 5 mortgage holders are struggling to make their repayments. That is going to flow on to the increases in property prices in the coming quarter because the demand won't be there, or the capacity to pay won't be there. And so it's I expect a reasonably softer period in the new year. And I think what that means, if you're a property investor and you've got cash and you've got capacity to fund an investment, it'll be a great time to be able to do your due diligence, find those properties that make sense, and make an investment at a time where you're not being outbid in a frenetic way because everybody's got money. So a good time for investors. And as I said, this headline was a little bit misleading, but it certainly got me in. So it played its role and sucked me in to talk about it today. And here it is. Big money mistake Aussies risk making as they rush to buy a home before Christmas. So, there is some validity in what they're saying. Don't rush. There's no need to rush, and do your due diligence. Get all the inspections done. Line up all the ducks in a row. Make sure it makes sense, and invest. And if it settles in the new year, so be it. There will be plenty of people looking to rent your properties in the new year as the dust settles over the Christmas New Year period. So that's it for Woody's Weekly Wisdom, episode number 37. If you are watching this on YouTube, make sure you click on the bell up there to get notified when these videos come out, or hit the subscribe button to the channel. And if you're watching on Facebook or LinkedIn, please leave us a comment, share and like these videos so more people get to see them, so we can spread the word and people can get better money information from the videos that we do, dissecting one article a week and what it's trying to tell us behind the headline. Have a great week. See you again next week. Cheers.